Let's start. All right. So, ladies and gentlemen, if this is your first time with us this evening, let me get a 111 in the chat. And if you are still learning how to cash out, let me get a 222. Let me get a 111 and a 222. This is your first time here with us this evening. Let me get a 111 and let me get a 222 if you are still learning how to cash out. So, ladies and gentlemen, let me help you with a little understanding of how this works, right? Let me help you understand exactly how the cost schedule works, what we do. Our belief is we want to make sure we educate and we want to make sure we implement. And so what we do is Monday through Thursday at 5 a.m. and 9 a.m., we're live in the market, right? We are in the market tools analysis. We're actually implementing what we've been educated upon. And then, of course, here on Tuesday and Thursday nights is our market talks. So we're going to give you a foundation and some basics. And then, of course, we're going to turn around and we're going to build on top of that. And that's what we're going to do tonight. Now, let me get my screen share together. Let me do that. So let me go ahead and get my screen share. And as I get this screen share, one thing I want to know also is let me get a 777 if you guys have been cashing out. 777 if you've been in profit. 777 you've been making money. 777. All right. So let's see, because I know where I want to start. I'm trying to see if I can log in before I share my screen. I want to log in twice. I'm trying to see if that's possible, because I want to make sure I can start. I want to walk you guys through something. Want to walk you through this evening. And I guess I can. So let's go. Let's go. I can see all those 777s. And guess what? I'm excited about a demo account because that tells me that you're taking it seriously. That's what, when you put demo behind there, hey, that counts. It's the same market. The only thing is you're using is that broker's money, okay? That's what you're using. Now, where I want to go and where I want to kind of start right here is we're going to talk today a little bit about crypto, all right? We are going to talk a little bit about crypto. And the reason behind that is I do not want the financial market, the Facebook, right? I don't want Facebook to be your financial advisor, right? Facebook is not our financial advisor, right? We are educated traders. We are Byob, educated traders anointed for wealth. So what that means is Facebook is not our financial advisors. We are not blindly taking messages or anything from Facebook. Now, before I dive in, I want to help you be clear this evening. I want you to look at what's happening with the market right now. We do have non-farm payroll. We talked about that this morning. We've been talking about it all week. We have non-farm payroll tomorrow. So you see the market gets a little stagnant, all right? Kind of going through a few of the things that we've been looking at. I'm just clicking and you see the market kind of gets a little stagnant, like it start moving sideways. So what I'm gonna be able to do tonight is not really show you a trade, but I'm going to be able to walk you through how the tool works. And you see me just clicking buttons, right? I'm gonna be able to show you how it works because the market, and I don't wanna put it off because I want to make sure that you all understand how to dive in here and how to profit. So what happens is when you go into the academy, you're gonna log into im.center, all right? Now, if you are on that playlist, right, where, you know, if you're on that playlist where we talk about your, you know, getting started, it walks you through the academy where you're going to log in and this is where your education is. But then you come down here for strategies and this is where I'm going to take you. Now, I'm going to tell you, if you're not enrolled with the elite package, you're setting yourself up for failure. You know, and I say that because you want to make sure that you're enrolled properly where you have access to all the tools and resources that the academy has to offer. And so when we understand what the academy has to offer and what's in there, then you understand and you want to know how to use them. And so you dive in and you make sure that you have access to everything. And so you see all these nice little pretty buttons under foreign exchange. You see all these nice pretty buttons under HFX. And then, but tonight I want to focus a little bit on our digital currencies, okay? This is where I'm going to spend a little time. Now in here, you have tools such as your SwipeCoinScalper and your harmonics, right? and we'll get to swipe coin, okay? If we have time, I'm gonna see, but based on the market, obviously the market is going to give us plenty time tonight, but I just kind of want to highlight these tools. And I want to do so because cryptocurrency has been rallying. And we talk about it quite often. We dive in here. This is the markup from this morning. I'm going to walk you guys through the BYOB cash out strategy, right? Because I want to make sure that you guys have a nice, solid foundation and understanding. But I want to also make sure you understand how to use these tools. And so when you come in here and you can kind of see, right, Bitcoin got kind of stagnant on us, right? But that's all because of non-farm payroll tomorrow. That's just what the market does. And so if we have to do it in more than one part, then we will. You know me, I do a part 1, 2, 3, 4, and 5, just to make sure that we have clarity, right? Because I want to be able to take my time with this, answer your questions, and kind of walk through this, right? So definitely want to do that. And so now what I do want to do is I'm going to come to a clean chart. And I am going to walk you through. So actually Bitcoin just triggered, right? So let's take a look. Haha, Bitcoin just triggered. And so knowing that Bitcoin just triggered, what I'm going to do is I am going to get my times on here. Let's start with making sure the chart is set up. See, you know, when you get in your car, right? Your mirrors and everything have to be in order. So that's like so you check your charts first, right? My mirrors got to be in order. Right, the seat has to be properly adjusted. You know what I mean? So you get in a different car, you take your time and make sure all those things are in place first. Well, that's actually what we're gonna do tonight, right? We're getting in order, we're getting in line, right? So make sure everything is there. So now what I wanna do is let's talk about the BYOB cash out strategy before we kind of get into anything else, okay? I wanna talk about that. We're gonna talk about this trigger as well, but we're going to talk about the BYOB cash out strategy. Now, before I dive into the strategy, I do want you guys to understand over here, right? You have two prices on here. I have my Hikinashi price and I have my real price. Now, Hikinashi candles are trend candles. You also notice that this is that real price. Now, I typically have it down. You see it open on Tuesdays. You also see me click it open sometimes on, you know, in the morning calls, because it really just kind of, you know, it really just kind of sets the tone and allows you to see it. I don't need it right now, but the point I'm making is my higher time frames give me direction. My higher time frames give you direction in the market. My mid time frames, right? My mid time frames is where I analyze, but then my lower time frames, right? My lower time frames is ultimately like where I enter my trade. Now, we hang out on my lower time frames when we do indices, crypto, and things. That's because the liquidity is so great. Now, understand there is really no such thing as trading on the hour, no such thing as trading on the 15, no such thing as trading on the 3 to 5. It's no such thing. This price is the price is the price. So what we're doing is viewing the market, viewing the charts. We're just looking at it from a different perspective, right? We're just looking at it from a different viewpoint. And so when you grasp the fact that you have to understand how all the time frames work together, then that'll help you understand how it works with a different viewpoint. So now we use 3 indicators. Now I'm gonna be on this 5-minute because that's where this trigger happened, but I'm going to walk you through that. So now here on my stochastic, I'm looking at my stochastic. I have my Hikinashi candles and I have my PSAR. That's it. I don't need anything else, okay? Now, we need support and resistance lines. We need, you know, those are things that we need, but I don't need anything else. And the minute you start mixing indicators, and I'm mentioning this because if somebody's doing it, right? There was a question asked in the chat today, how are you guys having so much success? How are you doing this? How is that happening when it's not happening for me? So I had a conversation with that gentleman. And the reality is there's a complete mixture of indicators. We're adding to, we're recreating new things, and you don't want to do that. This is price action with a twist, okay? This is price action with a twist. And so you don't want to remember, indicators are just things that really just kind of add to because you can't see the charts. So they're things that help you see it clear. But when we're looking at these indicators, this is, you know, a stochastic has moving average in it. So it's a momentum indicator. So it guides and give you direction. And so that's why it's our leading indicator, all right? And then these two are lagging. Now I need a support and resistance, and I need a support and resistance, right? That's what I need. And so my PSAR is that dynamic support and resistance. I also need trend. And guess what? My Hikinashi candles are just that as well. That's my trend. This is a dynamic support and resistance. So the market is telling you, based on what we're seeing, what we need to be doing. And so you just now have to be able to put all that together. So now, as I'm looking here, okay, I need my blue line cross over the red in an upward momentum. This is going to happen around the 20. Now, if I'm looking at this around the 80, I have my blue line cross over the red in a downward momentum, all right? Now, also, what I'm looking for is I need a green candle. We've already identified that this is pulling up for a buy. Now I need a green candle with a flat bottom, and I need that PSAR at the bottom as well. So knowing that I have all three of those indicators, all right? I have all three of those indicators, then what happens is with all three of these indicators, what I'm looking for is that's the BYOB cash out strategy. Now I'm telling you that this was back tested at a 92% accuracy rate. However, we don't want to leave it there because we have different market conditions. We have market, right? Different things that transpire in the market. And we have to be able to understand also, you personally have something called a Pip reaction time. Now, your Pip reaction time is simply, right, that reaction time that it takes you to get into a trade, okay? That Pip reaction time is simply how long it takes for you to execute. So when you are doing that, you want to make sure that you give yourself the cushion that you need. Also, you don't want to be counter trend trading and not know that you're counter trend trading, which means that you're going against the trend, okay? The trend is our friend. And so what we're going to do is what's called time frame confluence, all right? So now my time frame confluence, I go up to my 30-minute, and when I go to my 30-minute, this needs to be giving me indication that it's going into a buy, and at this case, it was. So then when I drop down, what I need to know is that it needs to still be buying. Now, this is not still buying, right? Right here, you see that red candle? So my stochastic is up. You see that red candle right there? We would not, under any circumstances, right? We, you, me, none of us, under any circumstances would enter the trade at that moment. We would enter the trade on that next candle because you do not want to enter the trade in a pullback. And that's what I mean about this being our leading indicator, our entry points. My lower time frames is where we enter the trades. It tightens up your entry point, all right? So now when I jump up here, all right, I want to get a bigger picture understanding of where I am in the market, okay? So now I'm going to squinch up the charts, right? So it's kind of like a phase one, a phase two, a phase three, a step one, a step two, a step three. And when I do that, I can kind of see where I am. Now, we already discussed this. I started the call with this information. I started the call talking about we're moving sideways, right? The market is kind of in that sideways motion. So even our training, look, my thing went away. So it's gone now because it's going to come, it's going to fall off, it's going to come, it's going to fall off. We were going to analyze it. I should have wrote it down, but we were going to analyze it. But I was going to analyze it so you guys could understand exactly, you know, how to take these triggers and what to do. But we talk about those all the time. So I'm not as concerned about those this evening. We do those on the morning calls consistently. You know, we always have a cryptocurrency trade that we go and pull and analyze most of the time, most mornings. So we're going to pull that. And so, but what I want you to see right now is BYOB cash out strategy and how to do that. So now let's go back over here. All right. So when I come over here, I want to, now, before I even keep going, any questions, comments, or testimonies? Any questions, any comments, any testimonies from anybody? Any questions, comments, or testimonies? So we can go forward. All right, no questions, no comments, no testimonies? None? Okay. So what I want to do is we're going to click on this SwipeCoinScalper. Now, if any of you guys are familiar with the Swipe coin, then you probably understand that the Swipe coin is like the signals that come out. Now, we do not, you're right, I'm not doing signals. We're not doing it. We're not doing it. We're going to empower you. Now, we're going to show you how to analyze them because you should never be taking a blind trade. See, to me, personally, it makes me cringe because when, as a financial advisor, people have a blind trust. And what ultimately happens is I'm not setting you up for success, the ultimate success. Because if you blindly trust me, or not just, let me not put me in that situation, because I actually transitioned and walked away and now I'm here. But as you know, what happens is you blindly trust your financial advisor and you're like, I don't know what to do. Just do this with my money. Like, just make me some money. Well, guess what? Too many people find out in hindsight that that wasn't the right thing. So it looks good and it sounds good while you're going through it. But then when it hits the fan, you find out the hard way that it's just not enough. You find out the hard way that there's something else, right, that should have been done. And so this is why we put so much emphasis on making sure that you are an educated trader, because that's what's going to stand the duration and that's what's going to stand the test of time. Now, understand that in this tool, I'm not concerned about that pop-up. I'm not concerned about these blind triggers or how they do that, right? We're going to take everything back to the vibrata, all right? Nothing changes, nothing shifts, okay? There is absolutely nothing that we're going to do different. But what this, oh, we just had one over here. I'm going to write this one down, though. I am going to write this one down. So we know that the vibrata just triggered for a buy, right? That did on the vibrata and then it fell off. So this actually just triggered as well. So that means we have two tools that are triggering on Bitcoin for a buy. All right. Now you notice that it doesn't give you the UTC time. Well, actually it does. I'm sorry. I was looking at a different one earlier. So you notice that it gives you that, but you can see that these just happened 3 minutes ago. One happened 3 hours ago for a sale. So there are only two cryptocurrencies that it does. Now, I'm not really concerned about how it looks over here, how it looks marked up. Not concerned about that, because the same thing we do with the harmonic scanner, we're getting the information and we bring it back, right? The same thing we do with the bounce back. We get the information and we bring it back. So because we're not trying to analyze and have to reset up charts and everything, it's already programmed inside of here, right? It's programmed inside of here. So what I'm gonna do, I'm trying to see that it come off on all of them. You know how it is sometimes. It did. All right. So I have a few of them marked up. I'm gonna leave this on here. Actually, I don't need to leave that on there. We know. All right, maybe I should, because we have some 111s on here. We have some people that are joining us for the first time. So what I'll do is I'll just thin it out just a little bit. All right. And you know what? Hey, all of you guys, I see you guys on YouTube and everywhere else. So, just go ahead if you have any questions or anything, just drop it in there and let me know. All right. I see all the chats. So now, right. Oh, look, it just triggered again. So let's analyze that. So what I'm going to do is I'm going to put this call price on here. All right. I'm going to put this call price on here in yellow. And I'm going to put the other call price on here. Maybe I should actually make it the call price. Maybe that'll help with the training. I think it would. What y'all think? 54031.49. All right. Let's put that call price on there. All right. Now, you see that? It just happened. Remember with this morning we were talking about, I'm going to reiterate it. The spreads are greater on Bitcoin. So that's a valid trigger, guys. I just want you to know that. So now I'm going to put this other call price on here. The one that we just did, 54203. All right. We should have probably just did that one. Let's make that one orange. So this one trigger right here and a trigger for a buy. Now, as we look at this, okay, we see that these triggers happen for a buy. Now, this is why both of them happen for a buy and both of them are close. They're really not that far apart. I mean, technically they kind of are, but they're really not that far apart. So I want you to understand what I'm going to do is I'm going to jump up here to my higher time frame. One happened on the 5, one happened on the 15. So let's go to the one that's in orange right quick, right? Let's do the one that's from the SwipeCoinScalper. So here at the 15 minute is what we triggered. Now, we always know that our vibrata triggers happen in a correction. So now what I want to do is I want to come up in my hour. And so knowing that trigger happened and that's on my hour, this is going up into a buy but my stochastic is kind of, we already talked about why it's doing that. So let's just hypothetically speak and say that this was still in that upward, right? Let's just say this blue line is crossing over. Would you guys consider that confluence? Remember, because you see what the market's doing? You see what the market's doing? I know we're on a training call, but yes, that's that pop quiz question. Is that confluence? Don't forget my hypothetical. My hypothetical says the blue line is crossing up a little bit. Now, it's not down, my hypothetical. I'm glad you guys said no, though, for, maybe you missed the hypothetical. That tells me, that's what I'm saying. That tells me that you guys are learning and paying attention. That tells me that you guys get it, right? Because it doesn't matter the asset. And so that's why I'm like, cough, cough, hit, hypothetical, right? We're going to pretend that this was still crossing up and moving up. Then now remember, we're probably not going to have a trade because we're, NFP. And this is paired, even though it says BTC, it's still paired with US dollar. So US dollar is highly and greatly impacted by non-farm payroll. So, right, that's why this is starting to consolidate real hard. That's why it's moving sideways real hard. That's why we had to do a training from a hypothetical perspective. So then, of course, I want to drop down. And when I drop down, all right, when I'm looking at this, right, let's get rid of this because we don't need that anymore. So when I'm looking at this, that's live. And then when I come over here, it's always caught in a correction. So if that was our hypothetical, we would have to wait till this correction finishes and it plays out. And then we're moving into a buy. Make sense? I see you talking about some no, you didn't hear my hypothetical either. Everybody, you know what? I love y'all because everybody on every chat is saying no, like you do not take that trade. So that I love you guys, right? That means you guys have been paying attention. So what that means, so you guys see it, right? So now you understand how that works. And so what happens is you just come through out here and notice that I'm gonna point it out kind of on here. I want you to notice that they're going to trigger all the time, but I want you to look at how they, obviously because of the market, but they haven't been playing out. But see, you guys understand, and we're gonna cover that a little bit. You guys understand how to come in here and take your profits. We did it this morning. So you guys understand what to do and how to come in here and how you guys should actually take your profits. So now, how do you take your profits? Well, one, we're going to come from over here in this consolidated state. Now, one thing I want you to remember about Bitcoin, and this is going to help you with like those buy stops and sell stops and things, because Bitcoin surges. Gold bounces, Bitcoin surges. So what I'm doing, we're just spending a little bit of time here in Bitcoin. So we already know all of it triggered for a buy. Bitcoin is going to continue rising. That's just what it's doing right now. Actually, all of our cryptos are rising, but you notice that, let's come back. Let's look at some of these market patterns. You notice that Bitcoin goes up. You notice how it kind of goes sideways. It always does this, and then it goes, right? It always does that. Now, obviously, we had sold kind of hard, but you notice we've been talking about trends, bounce backs, so many things we've been talking about. Now I want you to see how Bitcoin kind of came up. Let me put the trend line on there. How 1, 2 pull it through, right? 1, 2 pull it through. So you notice that, when it did that 1, 2 pull it through, you notice that it broke that trend line, and you see it surges. Bitcoin surges. Bitcoin surges, right? There's no reason to not want to trade it because it pays well, but you just need to know how it moves. All right. I love Bitcoin. And I'm saying that because it's so great to be able to get paid on the movement, right? Instead of me having to buy it, because this is a real price. All right. Something else I want to point out. I got all of them. We can go back and analyze. We'll probably do another one. But the reality is there's not a trade. So before I do that, it's something else I want to show you. But do I have any questions, any comments, or anything? Any questions, any comments, anything? So let me go back a little bit. Let's go back to see if we saw one. Let's just go grab one, right? We're just gonna randomly grab one. And this one was 10 hours ago, BTC. We're going to look at a historical one, 15 minutes at 53817.99. All right. No, nothing. And that was at October 7th at 11 o'clock. All right. So, right, that was October 7th at 11 o'clock. All right. So let's go back over here. All right. So I'm going to put the line here just so we can be on the line. So October 7th, it probably should have went back a little further just for training purposes, because I want you guys to see it. Because I told you, the market, we talked about that this morning. We talked about that greatly this morning. And so that was a sale, right? That was a sale that it was. And it was on a 15-minute chart where the trigger happened. And let's put the price on there. Now, I know this is new information. So I'm telling you guys, if you guys have a question, make sure you ask your questions. And that's why I said we'll do it, because it's the first time we touched this tool. This is the first time we touched it. We touched crypto, but this is the first time we touched this tool. So can we trade on a 1 minute time frame? Did you just get on a call? And I'm asking that for a reason, because I'm gonna reiterate something. All right, so that's what I figured. Because what I cover every time, there is no such thing as trading on a 1 minute. There is no such thing, like you don't trade time frames. I've said it all the time. People say it all the time. You have to understand what the time frames mean and how they correlate and what they mean to the market. So what I mean by that is my higher time frames give the market direction, right? Your higher time frames it takes longer to get a candle. You have to be on your higher time frames to see the true market structure, like the true patterns of where the market is right now. My mid time frames is kind of where I analyze, where you start seeing market activity and you can start determining your movements. My lower time frames is how I enter the trade. That's where most of the activity take place. So if you're not putting the time frames together and you're not really looking at all the time frames, you don't have to look at each and every single one, but we kind of walk you through that. But if you're not looking at those time frames, then you are setting yourself up. So you have to be able to coordinate, because there is market structure on the 1 minute time frame, but how much weight does that carry? So just think about it for a moment, right? Just think about it. When I look at my higher time frames, right? When I look at my time frames that are happening, on the my time frames, like think about the head of the household, right? They're not having, my head of the household, they speak and that's it, right? The head of the household, that's it. So let's just say the husband, the husband is the 4 hour, right? So that's the head of the household. And then as you get down and you trying to drill down, now this is that baby, that infant, and that toddler, right? So how much weight and authority do they have? They make a lot of noise. So there's a lot of movement, but how much weight and authority do they have? Hardly none, right? They don't hardly have any authority, but you hear them all the time. They don't stop. That's why we get so many triggers on a 5 minute. That's why we get so much information that come through on a 5 minute, because that's where all the activity is happening. So you're not technically trading on a 1 minute. My lower time frame shouldn't be anything more than my entry points. So if you ever get on a call and you don't start the call, when we start the call, then because we go over the strategy and everything at the beginning always. And if you don't get on at that point, and then when you log on, like if you see me on crypto or indices, then what you're seeing is me on those lower time frames. But we've already analyzed and understand where we are in the market. Just like you can see this box around here, we know we're consolidated. So we know that we're in this consolidation zone right now. So this kind of helps. So that's my bigger time frame. Great example. Thank you. So in my demo account, I put in a trade for Bitcoin and didn't have a stop loss. And then my trade stopped before it hit stop loss. You probably were over leveraged. You was probably over leveraged. But what I am going to say is perfect practice makes perfect, right? I had that same conversation with my daughter with her homework today. Perfect practice makes perfect. She practicing for a test tomorrow. Get that scratch paper out and do your math test. Do your math problems, write them out. So if I'm in my demo account and I don't put a stop loss in, if I'm on my demo account, how will I know where to put my stop loss and understand the spreads and everything that goes with the crypto, or if I don't do it? And then if it starts turning around on you, do we really have a heart to close the trade? Like, do we really have the heart? And I'm gonna tell you, 99% of people, they sitting there like, please turn around, please turn around. They start praying like God just gonna turn the market around for them. So that's as opposed to us putting our stop loss in. Like, you the only one praying about this market, right? You praying for it to go one way, somebody else praying for it to go another way. Somebody praying not get answered. So, you have to make sure your lot size was too much. Your lot size was way too much. You have to start with a 0.01, right? You have to start with a 0.01. So you can really understand, because you have to be able to balance it and actually look at it and see how much it moves. Because I'm gonna try to tap on that in a minute, right? So you say you learned that today? Yeah, you can't do that. We don't pray for trades to turn around. You pray for skill set. You pray for making sure that you understand. You pray for wisdom, pray for clarity, pray for those things. And then when you pray for those things, you won't enter a trade and think you got to pray your way out of it, right? So pray for those things. So now when I'm looking at this, okay, so here we are, and this trigger for a sell. Triggers happen in a correction, okay? Now, as far as that tool, we know that we're not taking any trades. This is where that trigger happened down here, but we're not taking any trades. So it gives us the ability to start seeing. Now, when I come over here, looking at this on the 15, I do see I had a red candle. I see I have a piece. I remember it triggered for a sale, but look at my stochastic. Now, I understand that this is probably more than likely because, I'm not knocking any tools. I want to be very clear. It's just the reality that the market is choppy today. The market is choppy because non-farm payroll is too high. It was a 1.0. Oh, no, ma'am. No, ma'am. No, ma'am. Not on Bitcoin. No, 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 ma'am. No, no, no. 0.01. 0.01. Not a 1.0. Yeah, it probably stopped out as soon as you hit the button. So as soon as you hit buy or sell, it was like gone, close. It was buy, sell, close. So yes, somebody say yikes. Yeah, no. But that's why it's a demo. So that's what it was. That's what it was. We shouldn't even be starting our FOREX pairs at a 1.0 until we understand. And that's why we had a compounded sheet. Remember, crypto and indices is your bonus check. We compound our FOREX and the other two are bonus. So we know that this is not a trade. This has been in an upward momentum. We would not have touched this, okay? So we would definitely not have touched this. We would not have been taking a sell. We wouldn't have done that right there. Now, let's just say had the trigger happened over here, this would have been a setup. We're still, no matter where we're pulling from, we come back over here, blue line cross over the red and the downward momentum. I have a red candle with a flat top and a PSR flip to the top. So let's move this arrow. So this, we're going to hypothetically, right? We got hypotheticals tonight because we have a choppy market, but I want you guys to understand how to use these tools so you can be practicing, okay? And so you come back over here, and of course, we would have been looking for this to be in a sell, but we still wouldn't have taken this trade, right? Because why? Look at my stochastic up. My stochastic's in a buy, okay? So this is pulling for a sell, which was valid, but then this was in a buy. So we would not take that trade. Any questions, comments, or testimonies so far? Any questions? Is the BYOB strategy how you go about target? Please ignore if you already went through that. The BYOB cash out strategy is a strategy I created. So this is the strategy, that we teach on and trade. Now, as far as target, if you're talking about your take profit, the market tells you your take profit. So for example, right, my stop loss, okay? And let me reiterate this because sometimes I won't go over it and I don't know why. It's just that I'm talking about your take profits and making the money, but your stop loss is always above or below the PSAR. So this is the dots, right? It's what we call a dynamic support and resistance. You know that when we're trading, and I do want to tap on this, so you kind of brought me back to it. I'll cover it now since you're asking a question, because I was going to cover this evening. When we're trading, right, we know that our stop losses are always on support and resistance lines, okay? Support and resistance lines is you know, if I'm price action trading or anything else, I'm looking at support and resistance lines for my stop loss. Now, it's definitely not, my stop loss is not on the support and resistance line, okay? So if I'm looking at these three lines, my stop loss is never on this line. It's never on the line. It's always above or below. It's just that what you have to do is somehow kind of figure out, you know, by guesstimation, the long tool, the short tool, by trying to figure out where you put that stop loss. What the PSAR does is the market tells you where your stop loss goes. The market's doing the heavy lifting for you, right? So it's doing it. I don't have to guesstimate where my stop loss goes. So my stop loss goes above or below the PSAR because this is what we call a dynamic support and resistance line. A support and resistance line goes sideways with the market. Dynamic moves, you see how it's not the traditional, so it's actually moving with the market. Now, as far as my take profit, I'm gonna squinch up my charts. This is part of why we go to the higher time frame. You get to determine where your take profit is. Like for example, all right, when this was moving up, we knew that it had to break this area, and then once it moved up, now with crypto, because it's never been this high before, like right now it's been this high, but I'm always looking left, okay? I'm always looking left. Now, if I was looking at Forex, you kind of want to learn this stuff on Forex because it's a slightly different application when I come to my cryptocurrencies. So if I'm looking at my foreign exchange pairs, right? This I mark up from this morning, you know that I'm looking left. You see how this started here? The market came back down. So you see, this is where my, I'm looking at market structure, right? You're understanding your trend lines, you're understanding that. Now, this is what I can tell you, right? With foreign exchange, I can do 10 pips, cash out, right? Forex pairs, 10 pips and cash out. I can do more than that and trade to my zones. But if you are doing your 10 pips and properly compounding, 10 pips and properly compounding, then what happens is it puts you in a position, right? It puts you in a position to where you can compound. And because your lot size should not be the same, this is where we got to break that stigma of what we need to do trading. My lot size is not the same when I'm doing a 10 pip take profit as opposed to a 50 pip take profit. You can make the same money in 10 pips that I do in 50 pips as long as you are using that compounding sheet properly. So you want to make sure but your lot size should not be the same for a 10 pips and a 20 pips. So you always want to make sure that you're operating from discipline and skill set trading, all right? None of this is by happenstance, okay? So hopefully that kind of answers your question. Now, with crypto, okay, part of the reason why, like I'm telling you, we're not using, right? This counts different, all right? This counts different. So just think about it, right? So this is real money. This is a real price, okay? This is how much, if I wanted to go buy a Bitcoin, I was like, I want a Bitcoin, right? I want a Bitcoin, okay? Go get that compounding sheet. The best thing I can tell you, let me pause for a moment. The best thing I can tell you is go get that compounding sheet. It's on our website. Download the compounding sheet and go play with the numbers. Because I can tell you, my growth percentage might be 3%. Yours might be 5%. Somebody else's might be 10%. I've seen that, trust me. So you might be a 1% growth percentage. And then you go on there and you plug those numbers in, and it's going to tell you from like up to 10 pips, then from like, it's going to tell you what your and how much you fund your account with. All of that's going to tell you, and it moves. So go pull that compounded sheet, and that's going to answer your questions. All right. As far as what your lot size should be on the Forex pairs. Now, here in the website is Be Your Own Bank Movement, beyourownbankmovement.com, not BYOB. You have to spell it out. Be Your Own Bank Movement. Now, as I'm looking at this, okay, so no, go pull that sheet. Go pull that sheet. As a matter of fact, join us Tuesday. Miss Anderson goes over that on Tuesday. She goes deep into that compounding sheet. So join us on Tuesday nights, and it's also a playback on the YouTube channel as well. So which is Be Your Own Bank Movement. Search us on YouTube. It's all right there. So now if I'm looking right here, right, this movement is $1. Every movement that you're looking at, we have $1, okay? So that's what I'm looking at, okay? So $1 movement is what we would call a point. So when this moves, so you hear some people say, crypto moved in points, right? So, but this is real money. So every time this moves, I'm looking at $1 is a point. Now, understand that 1 point, so $1 movement, in between there, I got 10 pips. So this is not a 10 pip and cash out. You literally like blue clothes for 10 pips on crypto. It's like blue clothes, right? So that's not it. So when I tell you guys, I have to do zone to zone. When I tell you guys that you need to understand support and resistance lines, there is no way around that when I'm coming over here. So when I come over here and I pull this tool, right? And I told you we'll do it again next week because I want to make sure that you guys are seeing this. I want to make sure you can see this with some movement. But when actually it did move, right? Both of them trigger for a buy. Look at it. It's moving. So we've been trading and it's been moving. So it did start moving. But now this obviously is a continuation trade, obviously, right? If I'm looking at my stochastics all the way up here. So this is obviously, and these candles get a flat bottom or flat top when it breaks through a support and resistance lines. So that's why we waiting on that flat bottom, flat top candle, right? We got to have that flat bottom, flat top. And that's why it takes price action from 70% to like 92%, right? So this is what that does. And so as you can see, this has been moving up, right? You notice, what did that look like before? As I'm sitting here and I'm looking at this, you see how this is now moving up. So, right? And so I'm look at how this one is starting to move up, right? You see that. So you have to know the support and resistance lines, guys. There is no way around it. Because if I come here and I'm looking at this, I'm gonna drop this. Let's get a psych level. All right. Thank you. Right. If I put a psych level on here, as you can see, our blue lines are psychological levels. Okay. And so just from here to here, if I just pull this from here to here, right? So you see that first one, I can't move it, right? Because it's gonna move too. But that first one says 46.89. That's dollars, right? So now the other one is my pip count. Okay, I just want you guys to understand that. So one is points. Obviously, one should be points. One should be points and one should be pips, right? So one should be points. So that'll be 515. So I just want you to understand that that's a lot of movement that takes place in there. So this is why when you look at if I open my MetaTrader 4, and when I open my MetaTrader 4, and you see, like, let me open mine real quick. We got a few minutes. We have a few minutes. I'm not going to show you my MetaTrader 4. I'm going to open my MetaTrader 4. And when I open it, right now it says 1203. The spreads is great, right? But is it really that great? So that's why when I was telling you guys this morning, if you're on this morning's call, when you're dealing with crypto, right? And you see this, because you notice, like, when you push the button with crypto, it's like all of a sudden it's like whoosh, it's like a whole bunch. It's like it either go in a hole or it go in a lot of profit. Well, that's why, right? That's why, because one, the spread is great. So like, let's say if I enter against the trend, then like if I was to enter, like, you see how this is moving up. And if we would have entered like right now, you see how this is in that pullback, it's coming back to retest that line. If we were to enter the trade right now, just see, I'm on the lower time frames. But if we were to enter the trade right now, you'd be in pullback, and in crypto is going to appear a lot greater. The money that you're looking at, right? The money that you're looking at is going to be a lot more, right? Because that's the first thing you're going to see when you enter that. And that's why you guys spaz out, because you don't take the time to come down here and wait for this correction to finish before you enter that trade. I'm not entering a trade right here. No, ma'am, no, sir. We're not doing that. So you want to know where your support and resistance lines are. You want to make sure you're looking at my higher time frame, okay? Seeing where I'm at in the market. We're starting to get a little curve, look like it's trying to reject. And then you can trade these zone to zones, right? You can go zone to zone, and your take profits, you get to decide where it's at. Now, we know we didn't take it past this point this morning when we took that trade, but you get to decide where it's at. And then you have to be able to cushion this, but you have to fund your account enough to be able to understand that you can cushion it. This is why we start you with Forex. You can trade indices, you can trade crypto. They pay very well. That's why I call it a bonus check. That's why I tell you it's bonus money, right? That's why I tell you that. Questions, comments, testimonies. We are not going to have time tonight to do this one, but that's okay. I told you guys, you know, I'll do a part 1, part 2, and part 3. I will. I have no problem with that. But what that is, the same way we pull the harmonic scanner, guess who also has a harmonic scanner? Cryptocurrency does. And so I will pull these on my lower time frame on this one. I will. And we'll go over that next week. We'll spend a little time on crypto. How often do we spend time on crypto, right? So look, this is still triggering for a buy, right? It's still got that buy trigger going on. Any questions, comments, or testimonies? Let's drop down a little bit. So trying to see if we get a new trigger coming through here at all. Y'all have any questions, any comments, any testimonies, nothing? Did anybody take the Bitcoin trade this morning? Has anybody traded Bitcoin? Are you guys going to try to trade Bitcoin now? Are you going to try to trade your cryptocurrencies now? Are we going to try to do it? You love crypto. I love it. So you're going to try. I got yes. Yes. What candle do I enter on first? As far as the candles, right? The way we describe the strategy is blue line cross over the red and an upward or downward momentum. You got a red candle or a green candle, right? A red candle or a green candle with a flat top or a flat bottom, right? So that's what you want to do. And then that piece or flip. So if you don't grab it at the first candle or what have you, if you're not catching when this first happens, you have no choice but to go to my higher time frame to see if you could continue or if you could take the trade. So it's not about, I understand what price action is. Get this candle, wait for this, then I can get in there. All that's accounted for in here. This is like an interpreter, right? The Hikinashi candles interpret for the Japanese candle. They translate, right? They are translators. And so that's what they do. They translate. So that way you don't have to be sitting there trying to, well, do I got 3 candles? Do I have this? Do I have the soldiers? Is it a doji? What is it? Is it an engulfing pattern? What is this? What is that? You don't have to do any of that. Okay. All that, let it go. Let it go. Relax, relate, release. Let it go, let it go, let it go. All right. We can let it all go because this is your translator. A Hikinashi candle is your translator. It simplifies it all. All right. So how long are those? It's not about how long the signal's good for. This going to be the market, these things trigger, right? An alert. All right. It's not a signal. A signal will be tell you like getting a trade right now or whatever the case may be, or, but these are alerts, which means you go analyze it. So based on the market, sometimes you can do the alert and it's bam, right? The trades happen, right? And it's whoosh. And then sometimes based on the market, you can see an alert and it was 3 or 4 hours later and it still haven't hit. And it's all going to be based on the market. Like right now, non-farm payroll is tomorrow. The market is not moving. The market is slowly crawling because they're waiting on the market movers. Remember, we ride the wave of the market. We have no control. We watch on the sideline. We can't call the plays. We don't have no decision-making authority. We got no input. We have none of that. But so we just have to sit back and watch the wave. And so let me go ahead and say this too, because I'm going to address this. And then, because you guys have a lot of good questions, right? But if you understand what I'm sharing with you and you start diving into this market, I promise you, you won't say things like, let me come back over here, like right here, right? Because even like right here, you'll say, oh, there was a stop hunt, or brokers was trying to get us. People don't care about you. They don't care about me. They don't care about you. We don't have enough money, and to be honest with you, we don't trade with them, right? We don't trade with them. We trade with our brokers. So it's like the market is on the highway. That's like the interstate. We on the sideline with the broker. That's who we trade with. We trade with the brokers. So you're not even in the market. Like, you're in the market, but you're not in the market, if that makes sense. So they don't care about us. Okay. So that's not like a stop hunt. That's none of that. That's, the buyers and sellers, because around the psychological levels is where orders take place. And that's the buyers and sellers trying to determine who will be in control. So just to kind of address that. So generally, what's the amount? What's the amount you can trade with crypto? It's going to depend on your broker. Honestly, now, if you, depending on how much you put, it's like, so let's say Ethereum is not going to require as much as Bitcoin. Ethereum, you're going to be able to trade in, with what? It just depends on what you start your account with. Now, I would recommend you have different accounts, but you have some brokers that allow you to fund a broker account with $20. Now, do I recommend you starting a trade account with $20? Absolutely not, right? I would definitely recommend you start a trade account with a little bit more than that, right? So, just for clarity and understanding. So just want you to know that. How much do you trade? That same question. What's the least amount? No, it's two different questions. Generally, how much should you have in your account to trade Bitcoin? Once again, it's the same question worded differently. It's going to depend on your broker. It's going to depend on your broker. It's going to depend. Now, I could tell you, if you are like, I guess I've never started the account with that, low enough to be like, how much you can do it with, but $200, $300, $400, $500, you should definitely be able to start a trade account with. Like I said, some brokers take $20. And if you don't have enough money and leverage in your account, they're gonna be like, no, you can't do it. But getting that demo account, and that's gonna help you understand, right? In that demo account, it's gonna let you know exactly how much money you can make, what your lot size should be, how much your leverage. But that's what I love about it. You get to have you get to really get a good feel for the market, build your consistency, your discipline, and everything with your broker account. I recommend you demo. I'm a strong believer in demo accounts. I wish somebody would have, when we got started, we didn't have all these calls in the system. We didn't have a through cash out strategy. We didn't have any of that, But so I wish somebody would have told me, because I think my broker account was take a few trades, got a good feel of the market, and then, my demo account, take a few trades, get a good feel of the market, then go live. And that's not the best way to do that. So we're very, very big on discipline, education, right? And making sure that you have good clarity and understanding, right? So we're big on that, right? So I think Bitcoin, you can have $100, but no, anytime you have to start your lot size with a 0.01. I don't care what you're trading. And I say that because I could tell you what to start your lot size with, but until you push the button, you have to get a feel for it. Because just think about it, like indices, a 0.01 is $1 a point, right? You're gonna make $1 a point. So if I'm trading the Dow Jones, then I'm gonna make $1 a point. So y'all have $100 days left and right? Who's had $100 days? Give me a 777 in the chat. I think as soon as we got on the call the other morning, right? As soon as we got on the call the other morning, it was somebody dropped in the chat. It was like 777, 342. I'm like, we just started the call. You made $342. We just started the call, but it's exciting. It gets exciting. So, and then look, y'all, there it is on the YouTube channel and in here. So, $100 days, and y'all do that before we even get off the 5 o'clock call. So, or y'all do that, it's like y'all flooding the chat. But, once the 9 o'clock call is over, I think everybody who has gone through the education and really followed the steps of consistency, persistency, and discipline, all of you all are having those $100 plus days, right? How you say it's real out here. I love it. I love it. I love it. So to answer your question, as far as, are you, okay, so let me give y'all the call schedule. So let me officially welcome you, because I guess I'm assuming you're a 111. This is your first call with us as we close out Monday through Thursday at 5 a.m. and 9 a.m. Eastern Standard Time. We're live in the market for our market analysis and our profit call, market analysis profit call. And on Tuesday nights is our basics call, okay? Tuesday is the basics where you get laid a foundation, dive in and understand the strategy, BYOB cash out. And here on Thursdays is our tool analysis and a deeper understanding. We dive a little bit deeper into the tools and the market structure and helping you understand how the market goes. So it's a full system in place to sustain your success. We have a full system in place to make sure you're successful. 5 a.m. is geared at the FOREX, 9 a.m. is geared for your indices, all right? And the evenings is about your education. So hopefully that answers your question. So guys, do you think that this, like I said, thank you. Well, I'm glad to have found you too. Thank you so much. So knowing that we went in here, we'll do this again. Like we'll come back through here and do it again when we got some activity and some movement in the market. I really want you guys to kind of dive in here and understand how to take these trades. All right. I want you guys to be able to actually utilize each and every last one of these tools. Like, right, we have multiple tools within here. And so you want to be able to understand it. And then you get to figure out what's your personality trait, what's your personality style, what, what's going on. So, you want to do that to where you can literally come in here. Exactly. Go try it for a week where you can come in here and you can just dive in and just, I see the same people there on the FOREX. I see the HFX, it's so much. And you want to be able to dive in and really take advantage of these tools. It's a lot in here to where it's so much that you have no choice to be successful as you come in. It's doing the heavy lifting for you. These are some great tools, great resources, great way to position yourself to be on the other side of money. So I'm just excited. So yes, you say you're going to take that and you're going to go in for a week. I'm going to be looking for your 777s. This was great. And you learned a lot tonight. Well, I'm excited and I'm going to be looking for you to implement it as well. So guys, with that being said, do not go anywhere. Okay. Do not go anywhere. Hold on. Let me